what are stocks? Traditionally speaking, most people will invest a portion of their money in the stock market, stock-based, and a portion into bonds, which are interest rate sensitive. So let's talk a little bit about stocks. You know, my favorite way to teach people what actually moves stock values, it's not quite what you may think it is. Coca-Cola, if we go back 25 years, it is a remarkable story what that company has been able to accomplish. Every single year, they've made more money. Well, that's a good thing. Well, that would mean that the stock should every single year just rise and grow and grow and grow. Reality is that's not what happens. Why is that? So if the company's earning more money, it's fundamentally more strong, it's gaining market share, everything's going right, why on earth would the stock ever go down? And here is the true, and here is the crux of it all. So the stock market is an open exchange. It's an auction type system. So we have buyers, we have sellers. Buy, 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 sell, sell, sell. I love Jim Cramer. It's a fun, exciting guy. But if we have more people looking to buy than sell, then what happens is the values will increase. And if we have more people looking to sell than to buy, then what will happen is the values will decrease. So it isn't necessarily a function of how the company is doing in the short term. Kind of is all based on consumer confidence, right? So Coca-Cola, maybe some bad news comes out about them and now people are worried for some reason. Well, big money's not jumping in there and panicking. Who are the ones jumping in there and panicking? Probably the people watching the news. And side note, I would definitely like to put that out there that the news, especially Wall Street news and stock market news, is financial pornography. You probably just want to stay away from that and jump into a good book. So it moves based on consumer confidence, and consumer confidence is typically manipulated by the news and by what people think about stuff. BP, when the oil spill happened, it dropped, the values dropped because people were scared, people were worried. Will BP come back? Please, BP is massive, they weren't going anywhere, right? And so the short-term money ran away, and then the long-term money, of course, the stocks have rebounded and done just fine. Go back to 2008, banks are too big to fail. As a result, stock prices are down, everybody's scared, everybody's worried, but we agreed to bail out the banks. So where was the risk of failure? Why wouldn't you buy it for pennies on the dollar and enjoy the ride back? So it's important to understand that our emotions work against us, and our emotions are manipulated against us intentionally. So maybe intentionally, maybe not, but it's important to keep that stuff in check. Don't panic. Please understand emotions are real. Please understand that just because something moves up or down doesn't necessarily mean that it affects the long-term trajectory. Buy solid, strong things that you believe in and hang on to them. If you want to have risk measures, have risk measures. But just be aware. Don't buy too much into the hype. Look long-term, invest, don't trade, and just be smart.